Right. Hi, everyone. Welcome to today's live analysis session brought to you by IC Markets. All right. Trust you've all had a great weekend, and let's hope for a good trade, another good week of trading as well. All right. Okay. Before we start, let me just make sure everything's all good. All right. Yeah. Okay. Everything it's looking good here. All right. Okay. Of course. Before we start, let's go through the disclaimer. Right, hi Andres, good to see you once again. Right, take note that this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. My name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, before we dive into the charts and trading view, let's take a quick look at the economic calendar for this week, where there's quite a few things going on, but I would like to bring your attention to the Australian CPI that's going to be released on Wednesday, 28th of August, followed by the preliminary GDP data for the second quarter of 2024 in the US. That's on Thursday, 29th of August, as well as the PCE price index, which is on Friday, 30th of August. Right, so this is the calendar for this week. Right, we've got quite a few things, other things going on as well. We've got German i4 business climate that was released earlier today. We've also had durable goods coming up later at 12:30 p.m. GMT. Australia CPI data, monthly CPI data is going to be released on Wednesday at 1:30 a.m. We also have preliminary CPI data out of Germany, unemployment claims, Tokyo core CPI as well on Thursday, and of course the PCE price index on Friday. Right, looking at Australia's CPI or inflation, right, consumer price inflation. On the left, I have the chart for the quarterly data on an annualized basis, and on the right is the monthly CPI indicator also on an annualized basis. So we can see inflation has picked up through the months of April to May based on the monthly CPI indicator, which is also being reflected in the second quarter's reading as well, with inflation accelerating from 3.6% to 3.8% year over year. Right. However, when you look at the forecast for this week's data, the monthly CPI is expected to ease from 3.8% down to 3.4%, right? So expecting this June's figure to we're expecting July's figure to ease from June's high of 3.8%. Now, of course, should we see inflationary pressures dissipate in Australia, that could potentially function as a bearish catalyst for the Aussie, where we've seen the Aussie rise very strongly over the last couple of weeks, and this could be a result that could potentially pull back this recent rise for this currency pair. Right, looking at GDP data, right, GDP is expected to remain unchanged, right? The advanced estimate came in at 2.8%, and the preliminary GDP points to an unchanged figure of 2.8% once more. Right, so we can expect we continue to see GDP growth in the second quarter expand at a pretty steady state. Right, we saw a very strong second half in 2023, where GDP grew 4.9 and 3.4% respectively, right? But we saw this growth taper down quite significantly, down to 1.4% in the first quarter of this year. But it looks like in the second quarter, we are seeing economic activity rebound pretty steadily in the second quarter of this year. Now, when we look at the composite PMI readings over the last 3 months from June to August, we see a pretty strong, actually even from May all the way to May to August, we see us seeing a very strong level of expansion, right? At the composite level, take note, the growth in PMI activity is being led by the services sector, while manufacturing has actually fallen into contraction over the last couple of months. But overall, we can see PMI activity continues to remain robust, which is also a good signal that, or a good sign that to say that we can expect pretty decent GDP growth in the second quarter of this year. Right, okay, with that, now let's move on over into the, and finally, we have the PCE price index, right? The PCE price index is the personal consumption expenditures index. It is a inflation metric, and it is actually the Federal Reserve's preferred gauge of inflation. Now, we can see over the last couple of months, on we can see inflationary pressures continue to moderate lower, right? We see headline PCE, which is the chart on the left, and core PCE, which is the chart on the right, both of which are on an annualized basis. We can see that they have moderated down quite steadily over the last couple of months. If we do see another month of cooling, right, come Friday, then we can definitely expect the US dollar to come under significant pressures, selling pressures once more. Right, we've seen the dollar sell off very strongly since the end of June, and especially over the last couple of weeks as well. All right, okay, with that, let's move on over to the charts on TradingView and begin our analysis. Right, here we are on the chart for the dollar index, right? I'm on the daily time frame here. Right, so as you can see here, since the end of June, the dollar index climbed as high as about 106.10 and has reversed quite sharply to drop significantly lower. Right, we had a combination of softer than expected inflation data, so both CPI and PPI came in soft in July and August as well, right, uh, signaling potential rate cuts, which caused the dollar to lose its value. And similarly as well, at the end of August and end of July and early August, we saw weak labor market data out of the US as well. Right, we had the ADP report released on Wednesday, 31st of July, and we had the non-farm payrolls being released on Friday, 2nd of August. Both were poor, right? They had both reports had missed their respective forecasts. We saw job creation rise at a very slow rate, and at the same time, we saw the unemployment rate edge higher as well. The unemployment rate in the US currently stands at 4.3%, and it has risen over the last 4 to 5 consecutive months. So we are seeing pretty a relatively significant slowdown in the US labor market. We're not seeing job losses just yet, but the pace of hiring has slowed down significantly, while the unemployment rate has also edged up unexpectedly higher as well. So this poses serious concerns on the future state of the labor market as well, which is also why we saw the US dollar come under significant selling pressures over the last couple of weeks. And of course, last Friday, which was 23rd of August, we had Federal Reserve Chairman Jerome Powell deliver his opening speech as well as his outlook on the US economy at the Jackson Hole Symposium, where he explicitly uh, made the mention of a pivot for the Fed as well. So they've definitely going to cut at September's FOMC meeting, right? And his change in tone has been has been picked up obviously by the markets, right? And we saw the dollar sell off significantly last Friday, while we saw bond markets rally as well. And also, it has also provided a strong tailwind for equity markets last Friday, right? Okay, so with that, we can see that the dollar index has actually broken through a significant swing low. There was a significant swing low support level at around 100.83 that occurred at the end of December last year, and we saw this bearish breakout take place last Friday. Now, this with this bearish breakout taking place, we can expect the dollar index to slide even lower. However, take note that when we look at the dollar index on the daily time frame, and when we look at the momentum indicators such as the RSI and the stochastic oscillator, they are both going to look to be highlighting a potential oversold condition as well. So we first received this signal here on Wednesday, 21st of August. We can see the RSI dropping as low as 25.2, stochastic dropping down to about 6, and we did see the dollar index retrace a little bit higher on Thursday, 22nd of August. Now, of course, with the dollar index making another leg lower last Friday, we can expect further downside. However, take note, right? Tread with a little bit of caution. We do see once again, as of today, the RSI and the stochastic oscillator highlight a potential oversold condition. So that means we can expect a slight retracement for the dollar index to the upside. Now, this retracement could last for a day or two, right? So take note, I do suspect the dollar index is going to slide lower by the end of the week. However, in the first half, or at least for the first couple of days, right, we can expect some consolidation around this level of 100.70, and perhaps even a little bit of retracement to the upside as well, right? So take note of the potential oversold condition being highlighted by the stochastic and RSI indicators as well. Despite, of course, we see very strong overhead pressures for the dollar index, we see it in a very clear downward downtrend here. right? We see a series of lower highs, series of lower lows, right? Very clearly, right? We can see oops, hang on, right? We see a series of lower highs and a series of lower lows as well, right? It's a very clear downtrend. However, take note that we are also seeing a potential of we're also seeing a potential oversold condition as being highlighted by these two momentum indicators. So just tread with a little bit of caution, right? For all the dollar bears out there, tread with a little bit of caution. We may see a retracement to the upside for the next 1 or 2 days, right? We may get a better opportunity to short on the dollar index, perhaps by the end of today or maybe even tomorrow. Right now, should we see the dollar index slide even lower, right? Where is the next resistance as the next support area? Well, we have to go back all the way to mid-July of 2023, right? Once again, we see another significant swing low taking place here on 17th of July. The dollar index dropping strongly from 103.40 in the second week of July down to as low as 99.60 by mid-July. It stabilized around this region here at around 99.75 before reversing to stage a very strong rebound. So this is where the next major support for the dollar index is going to sit. And it also has the presence of a Fibonacci extension at 161%. Now, this extension level was found by running a retracement. We started this retracement from here, this low on the 8th of March going up to the high here on the 16th of April, and we can see that the Fibonacci extension at 161% aligns very well with the swing low support here that took place in mid-July of 2023. So this is how the first support has been identified. And of course, if we do see the dollar index continuing to slide lower, right, we can definitely identify a potential take profit zone close to this first support, which is at 99.77. Right, we can also run I believe we can run a Fibonacci projection. Let me see if we can run a projection across these points. Okay, no, it's not. Oops, wait. Okay, no, there's no projection here. But yeah, previously the projection aligned very well with the pivot, which was the initial swing low support here. Right, so we don't need this projection. That's fine. And okay, with the dollar index retracing a little bit higher, we can actually now draw a Fibonacci retracement starting from this high here on the 8th of August going down to the low of today. Right, maybe that's a 23.6% that we can use. All right, we can use the 38.2% as it sits just above the first resistance, which is a pullback resistance here. Right, we see a nice pullback taking place here on 21st and 22nd of August last week before the dollar index reversed to drop lower. So this is where the first resistance for the dollar index sits, which is at 101.51. Right, so if the dollar index manages to stay underneath the pivot level here, which is 100.83 for the next 1 or 2 days, right, that may give us a better opportunity to go short on the dollar index, and we may see a bearish reversal take place, right? Despite seeing a bearish breakout occur last Friday, we may see this index retrace a little bit higher for the next couple of days. But if it manages to stay underneath the pivot at 100.83, it may help us identify another opportunity to go short on the dollar index. Right, so these are the key levels here for the dollar index on a daily time frame. Let's see if there's anything we can highlight on the 4-hour time frame. Let me see if we can use the 23.6%. No, okay, that's fine. Right, okay. Right, okay, I think this is fine. I think there's no need to fine-tune the levels, right? I think it's pretty much relevant as well. Whatever we've identified on the daily time frame in terms of pivot, first resistance, and first support is simply is also just as applicable for the 4-hour time frame as well. Right. If anything, I would just probably highlight a descending trend line. There's a pretty good descending trend line that I see here on the 4-hour time frame. Right. We can see that this the dollar index has tested this trend line a couple of times, and especially if it manages to stay underneath the pivot level at 100.83, and as well as remaining underneath this descending trend line, we have another good opportunity to go short on the dollar index. This looks to be a pretty strong resistance zone at around 100.85. And looking at the Ichimoku cloud on the 4-hour time frame, right, the dollar index continues to trade underneath the bearish Ichimoku cloud as well, right, highlighting the ongoing overhead pressures. All right, so once again, these are the key levels for the dollar index. We are seeing significant overhead pressures But at the same time, we do see the momentum indicators, which are the RSI and the stochastic oscillator, highlight a potential oversold condition based on a daily time frame, right? We can see this happening uh, last week as well on 21st of August, as well as on 6th of August, and also on the 17th of July as well. So you can see here on these past three occasions, when we saw these two indicators highlight a potential oversold condition, we did indeed see the dollar index stabilize at their respective levels and make a retracement to the upside before resuming the downtrend. So be wary of this uh, condition that is being currently highlighted as well. All right, okay, let's move on over to the euro. Looking at the euro as well, we'll begin with the daily time frame first. We can see that the euro made a bullish breakout above this prior swing high resistance. This was a swing high resistance that occurred at the end of December at around 1.1106. This bullish breakout took place on 20th of August. Price moved higher for another day, but it pulled back towards this level. Right, so a prior swing high resistance can proceed to function as a pullback support, and which is what had exactly happened on Thursday, 22nd of August, before the euro bounced very strongly off this level to climb higher. Right, so the next major resistance level, so it's quite clear where the first support is. The first support for the euro stands at 1.1106, which is an overlap support. And the next major resistance for the euro comes in at this swing high resistance, which occurred in mid-July of 2023. Right, we can see the euro rising as high as 1.1274. Right, so the pivot has been identified at 1.1244. Here's a strong resistance barrier here for this currency pair. And the next major resistance is coming in at a pullback resistance level. This is a pullback resistance level that occurred in February of 2022. Right, so we're looking at really extended levels for the various currency pairs and the indices, right? And we have to really zoom out and hit back a couple of years to identify potential resistance areas or support areas as well. Right, so we as I mentioned, right, with dollar index looking to retrace higher, right, over the next 1 or 2 days, we can also expect the dollar index perhaps, we can expect the euro to potentially pull back a little bit as well before resuming the uptrend, and then where I think it will really run into resistance is at this pivot level here at 1.1244, which is a swing high resistance that occurred in mid-July of 2023. Right, let's see if there's any Fibonacci retracements or projections that we can use. Let's see. No, I think in terms of retracements and extensions and retrace projections, I don't think there's anything we can use. Right, that's fine. Let's look at it on the 4-hour time frame and see if there's anything else that I would like to highlight. Right, we can see the euro continuing to trade above the Ichimoku cloud as well. The Ichimoku cloud has transitioned from red to green, highlighting the bullish momentum, of course, and we see it in a nice uptrend. Right, if anything, I think I can probably identify a pretty decent ascending trend line. Would it be from here? Probably something like this. Yeah, this is a pretty decent ascending trend line that we see for the euro. Right, we can see it has bounced off this level several times, right, and it's also would help us identify a potential support area. So I see an intermediate support area for the euro as well, an intermediate support area at 1.1148. So the intersection between this intermediate support level and the ascending trend line is where we can identify a potential support area as well. So if we do see the euro pull back towards this level or to this zone here, which is at around 1.1145, and if it manages to stabilize around this level here, it may give us a good opportunity to go long on the euro once again. And if it does stabilize here and we go long, we can target the pivot as a potential take profit zone, which is at 1.1244. All right, hi HSL. Yes, definitely we'll cover the dollar yen as well, right? We'll work our way down through some of the majors, and we'll cover dollar yen as well for sure, right? Okay, so these are the key levels for um, the euro on the daily and 4-hour time frame, right? If anything, I think we can probably run a Fibonacci retracement here from this swing low on 1st of August to today's high. Let's see, let's pull up all the fibs. Right, we can see the 23.6% retracement aligned pretty well with our first support. So that's a good additional supporting factor to have. All right, okay. So this is fine, right? So these are the key levels here. And also looking at the euro on the daily time frame once again before we move on, right? We can see that we did see a potential overbought condition being highlighted last Wednesday, 21st of August, right? We saw the RSI hit 75. We saw stochastic oscillator hit about 97. And we did see the euros pull back on the following day. Remember, 21st August, we got the signal, potential overbought condition, and the euro did pull back on Thursday, 22nd of August. So once again, both of these indicators are trading at are not trading um, at their respective extremes on the high side. So we may get another potential overbought condition once more. So just be wary of that. All right, okay. Oh yeah, and yeah, this ascending trend line actually looks much better on the daily time frame, right? We can actually look at this ascending trend line looks actually much better on the daily time frame here. All right, okay, so these are the key levels for the euro. Let's move on over to dollar yen. And we'll also cover the Aussie as well since we've got inflation data out of Australia later today. All right, looking at dollar yen, right before we get to where it's currently trading, we can see dollar yen topped out at around 162 in the first week of July, staging a strong bearish reversal, dropping as low as 141.74. Right, so this strong down move here, downtrend here was caused by a couple of factors. One of which was the intervention measures. Right, the Bank of Japan had intervened in the open market, in the open currency markets. Right, basically they were selling their foreign treasury holdings, which is basically US dollar and US treasuries, and using the proceeds to buy back the Japanese yen from the open market. And when they do that, it causes the dollar yen to drop in value. Remember, when a big central bank intervenes in the open currency markets, and when it buys back the Japanese yen, it causes uh, the dollar yen and the other yen crosses to pull back very sharply. So this is what happened in the end of July. And also we had uh, the monetary policy statement by the Bank of Japan as well towards the end of July, where they raised their key policy rate once again. So we had a hawkish move by the Bank of Japan, which created even further demand for the Japanese yen, which caused dollar yen to plummet all the way down to 141.70. Right. Since then, it has retraced a little bit higher, but it stalled at around 149.30 in mid-August on 16 August and has reversed to resume the downtrend. Right. So we see this is a nice swing low support here that occurred on 6th of August at 144.11 that has been identified as a pivot. So we have a potential bearish breakout currently taking place today, right? Quite similar to the bearish breakout that occurred last Friday for the dollar index. Now we are seeing a potential bearish breakout currently taking place for the dollar yen. Right, so should we see a clean break below this pivot level here at 144.11, we can expect this currency pair to slide down towards its first support, which is a pullback support level here, or it's a swing low support level here at 140.80, which occurred at the end of December. Right, we see a very nice swing low taking place here, and the dollar yen stabilized at around 140.76 back in early January, at the end of December, early January, before staging a very strong rebound. Right, so this is how the first support for dollar yen has been identified. Pivot is at 144.11, is currently being tested. Right, we have a potential bearish breakout scenario on hand, and of course, the first resistance for dollar yen has been identified at this pullback level here. This is a pullback resistance that occurred on 22nd and 23rd of August at 146.30. Right, we can probably draw a Fibonacci retracement here as well. From this high on 15th of August down to the low here on the 26th, might be a 50 or 61% that we can use. Right, there's a 50% retracement that aligns very well with this pullback level here, adding further significance to this resistance zone. Right. We can also, okay, we've also run a Fibonacci projection, right? We've run a projection starting from here, 0.1 on 30th of July, going down to 0.2, the low of 5th August, and ending it here at 0.3 on 15th August. We can see that the 61.8% Fibonacci projection level aligns very well with the swing low support on the 2nd of Jan as well, right? So we have a additional supporting factor to the strength of this support zone here. Right, let's look at it on the 4-hour time frame. right? Looking at this currency pair on the 4-hour time frame, we can see, yep, it has broken below the pivot and is currently consolidating around this level here, right? Looking at it on the 4-hour time frame, I can also spot another pretty decent descending trend line, right? There's a pretty decent descending trend line as well, right? So if we do see any retracement to the upside for the dollar yen, I do see a strong resistance area that's being identified by the pullback resistance at 146.30, the descending trend line, as well as the bearish Ichimoku cloud. Remember, the bearish Ichimoku cloud itself can function as an area of resistance as well. So we have three factors that are contributing to a strong resistance area at around 146.30. So once again, we have a pullback resistance at 146.30. We have this descending trend line, and at the same time we have the Fibonacci retracement. We have the Fibonacci retracement at 50%, and we have the fourth factor, which is the bearish Ichimoku cloud itself. Right. Okay. And let's see if there's anything else that I can highlight. All right. We don't really see oversold and oversold condition being highlighted by the RSI and stochastic just yet. The last time we saw an oversold condition was on I would say 5th of August, right? On 5th of August, we saw RSI drop as low as 13.2, stochastic oscillator drop around 4 or under 5, and we did see the yen stabilize at around 144, stabilize around 144 before retracing higher as well. But we don't see an oversold condition being highlighted just yet. So perhaps this bearish breakout could eventually play out over the next 1 or 2 days, right? We could see dollar yen slide lower over the next couple of days. All right, so that's what we have for dollar yen. Right, let's take a look at the Aussie, right? Since we've got inflation data out of Australia on Wednesday, right? So this pivot level here, we saw was previously a swing high resistance, right? This was a swing high resistance that took place in mid-July, right? We see a very nice resistance barrier here, very nice market structure showing us a swing high resistance, which was taken out last Friday. However, the bullish breakout failed to materialize, and we see the Aussie pulling back quite strongly today. Right, so after the bullish breakout occurred last Friday, I was expecting this currency pair to rise a little bit higher, but it looks like it has stalled around this resistance level and looks to be pulling back here. Right, and also looking at the stochastic and RSI, we did get an oversold condition as well, a potential oversold condition being highlighted, I guess you could say on Wednesday, 21st of August, right, as well as today as well as on Friday, right? So we saw both the RSI and stochastic oscillator at their extreme ends, which indicates a potential overbought condition. So typically we can then expect this currency pair to potentially stall, pull back a little bit, maybe before resuming the uptrend, right? This is something similar that we saw here as well last on 12th of July. RSI hitting 70.4, stochastic oscillator hitting about 90. We did see the Aussie stall at around 67.90 before reversing quite strongly. Right, so it looks like the Aussie has actually failed to continue its bullish uptrend, right? It has failed to continue its bullish uptrend through the pivot. It's actually stalled around the pivot and looks to be pulling back. Right, looking at here on the daily time frame, I also see, I guess, a pretty decent ascending trend line as well. Right, so this is going to be a pretty important trend line as well. So if this trend line doesn't hold, then we can safely say that we can see a strong shift in momentum. Right, currently we are seeing a strong bullish momentum since 7th of August. However, if we do see the Aussie break through this ascending trend line, then we can get the confirmation that we are seeing a shift from the bullish to bearish momentum in trend. Right. Okay. So of course, the first pullback support level for the Aussie is at this level here. It's at 66.99 or 67 cents. We see a nice pullback support taking place on Thursday, 22nd of August, and on 23rd we saw this currency pair bounce very strongly. Right. And in terms of resistance, the next resistance above this swing high that took place in mid-July is another swing high resistance that took place at the end of December. Right. We see a very nice swing high taking place here. with the top of this wick going as high as 68.70, and we also see the presence of a 127% Fibonacci extension level just above this swing high resistance here on 28th of December. Right, let's see. Okay, I think we can also run a Fibonacci retracement, right, from here, this low on 5th of August going up to the high of last Friday. Let's pull up all the fibs, right? We can see a 23.6% retracement level aligned very well with the first support here. Now let's look at it on the 4-hour time frame, right? We also see a strong support zone, right? We have the ascending trend line, we have the pullback support at 66.99. We also have a Fibonacci retracement at 23.6%, and in addition we have the bullish Ichimoku cloud, right? Remember, the bullish Ichimoku cloud can function as an area of support as well. So we have 4 factors that are contributing to a strong support zone. First of which is the pullback level at 66.99, the Fibonacci retracement at 23.6%, the ascending trend line here, which is the dotted green line, and of course the bullish Ichimoku cloud itself, all 4 of which are highlighting a strong support zone. So if we really do see this currency pair break through all these support zones, then we're going to have a significant shift in momentum, right? And then we can probably expect a strong pullback as what we saw in the second half of July, right? We saw the Aussie reverse off 67.85, dropping as low as 63.50 as well, a very strong bearish reversal that took place. Right, we can see price breaking through the bullish Ichimoku cloud in mid-December, mid-July, and also at the same time we see an ascending trend line being taken out as well. As there was a pretty decent ascending trend line that got taken out, and as price continued to move lower, it broke through the bullish Ichimoku cloud as well, which accelerated the bearish reversal over here. All right, for now we are seeing the Aussie pull back. So if it does manage to find support around this region, which is at around 67 cents, right, 67 cents or 67.20, if it can stabilize around this level here, it may give us a better opportunity to go long on the Aussie. However, if it breaks through all these support levels, be mindful we can expect the downside price action to accelerate even further. Right, so this is what we've got for the Aussie. Let's move on over to the commodities and look at gold. All right, looking at gold here, we can see gold is attempting to break higher as well. We can see gold, this was the, oops, sorry, I'm on the weekly, daily time frame here. Right, here we go. We can see, all right, first of all, we see the intraday high for spot gold prices being set at $2,531.72 per ounce. Right, this all-time intraday high was formed on Tuesday, 20th of August, and it's a level that also has the presence of a Fibonacci projection at 100%, and also there's an extension level at 127%. So there's a strong resistance zone that's identified by 2 different Fibonacci levels. So what we call this is a Fibonacci confluence. It simply means that you have more than one Fibonacci level at a particular price zone or at a particular price level. In this case, there's a strong resistance zone being identified by these 2 Fibonacci levels, basically the 127 extension, which starts from $2,520 per ounce up to, oh sorry, 2,519 to 2,520, which is the 100% projection here. And we see gold making a strong bullish move up today, right? It looks like instead of making a pullback, right, despite dollar index rising, right, despite dollar index rising, we're actually seeing a bit of positive correlation between the dollar and gold, right? Typically the dollar and gold share an inverse relationship, so that means when the dollar is rising, gold prices are typically falling, and vice versa. However, in this case we see the dollar retracing higher, and at the same time we're seeing gold prices climbing higher as well. So we're seeing a positive correlation at the present moment, and instead of a potential pullback, we're actually looking at a potential bullish breakout currently in play for gold as of today. Right, it's trying to attempt to break through this pivot level, which is a strong resistance barrier that's also identified by the Fibonacci confluence here. So take note, we're actually currently seeing a potential bullish breakout take place for gold prices, and if it does clear the intraday high that was formed on Tuesday, 20th of August. We can expect this precious metal to rise up towards the first resistance that has been identified by the Fibonacci extension at 161%. Remember, take note, with the all-time high being formed on Tuesday, 20th of August, there's no other uh, level that we can reference, right? There's no other pullback level, pullback, overlap, or swing high resistance that we can reference from the past to identify a potential resistance area. So in such a scenario, we have to rely on Fibonacci tools such as extension levels and projections, right? With the projection at 100% currently being tested, we are relying on this extension level here. We found this extension by running a retracement from 17th of July down to the low on 25th of July, right? So that's how we found this first resistance at $2,564 per ounce, which is actually a Fibonacci extension at 161%. Right, let's look at it on the 4-hour time frame and see if there's anything else to highlight. No, probably not. Right, we can run, okay, there's a retracement here. Right, we're going to start the retracement from this low on 5th of August and fine tune it here a little bit, ending here at the high of 20th of August. Not 23, I believe it should be the 38%, right? Yep, there's a 38% that we can use. Right, the 38% Fibonacci retracement aligns pretty well with the first support, which is at $2,468 per ounce. Let's see, I believe there might be an extension level that we can use on the 4-hour time frame. Let me check it out first. Right, we can use once again 161% and 121%. So, okay, so basically I ran a Fibonacci retracement starting from this all-time high here on 20th of August, going down to the low of last Thursday, and key extension levels sit at 127 and 161%. So if we do see gold break above its prior all-time high, the next resistance level, I see an intermediate resistance level here at around the 127% extension. Right, this can be your first potential take profit zone, right? If we do see this bullish breakout, gain further traction, and we see further momentum to the upside for this instrument, right? We can expect it. We can then target the first take profit level at the Fibonacci extension at 127%, and of course, if prices continue to climb even higher, we can then target this Fibonacci. We have a dual Fibonacci extension, right? We have a dual Fibonacci extensions at around $2,565 per ounce here. All right, so these are the key levels for gold, right? XEU USD is an instrument that tracks the spot gold futures. All right, let's move on over to oil. Right, XTI USD is an instrument that tracks WTI crude oil futures, and we've seen crude prices stage a very strong rebound at the end of last week. Right, we saw a combination, not a combination. We're seeing rising escalation, right? Rising geopolitical escalation in the Middle East, right? Which has triggered a strong bid for crude prices here. So we saw XTI USD stabilize at around $73 per barrel. This is a multi-swing low support level that has been in place since the 4th of June, right? We can see the first swing low taking place here on the 4th of June, the second swing low taking place here on 7th of August, and of course the most recent one here taking place on the 22nd of August as well. So very significant support level here where crude prices have bounced off and is rising strongly today as well. Right, so with crude prices rising strongly, right, I've identified the pivot level at $77.50 per barrel. This is a pullback support level. This was previously a pullback support level that took place on Wednesday, 14th of August and the 15th of August. So you can see crude prices stabilizing here for a couple of days before finally breaking lower. So what was previously a pullback support level could now potentially function as resistance. So that's how the pivot has been identified at $77.50, which is actually a pullback resistance level that has the combination that also has an alignment with two Fibonacci levels. We have a Fibonacci retracement. Right, we began this retracement from this high on 12th of August, going down to this low here on the 21st of August. We can see the 61.8% Fibonacci retracement aligned pretty well with the pivot, and at the same time we have a Fibonacci projection at 61%. Right, so this 61.8% projection level was found by starting from here, 0.1 on 5th of August, going up to 0.2 here on 12th of August and ending at point 3, which is on the 21st. So we can see a Fibonacci confluence at around $77.50, right? We have a retracement and a projection being highlighted around the pivot. And at the same time, we see the 100% Fibonacci projection align well with the swing high resistance that occurred on 12th of August. So this highlights or gives further significance to the strength of this resistance zone here. So should you have any long positions for crude oil, right, we can then use this pivot level here at $77.50 to identify a potential take profit zone, right? There's a potential take profit zone that can be identified at this pivot level, which also has a Fibonacci confluence here, adding further significance to the strength of this resistance here. All right, now let's look at it on the 4-hour time frame. Right, okay, I think the levels are pretty fine. Let's see if there's a need to highlight ascending trend line. Perhaps here, perhaps we can highlight a potential ascending trend line as well. We can see XTI USD bouncing off this ascending trend line several times. So as long as it manages to stay above this trend line, the bullish uptrend should remain intact. However, a clean break below this level or below this trend line here, and we can expect this commodity to resume the downtrend, right? So take note, as long as it continues to bounce off this ascending trend line, we have the bullish momentum on our side. But of course, a clean break through this level here could highlight a shift in momentum once more. All right, okay, so we've covered the commodities. Let's move on over to the indices. Let's look at US 500. And of course, if there's any other requests as well, right? So if you have any requests for any other instruments, do drop them in the chat box early so we can have time to go through the analysis together. All right, looking at the US 500 on a daily time frame. All right, we see a nice V-shaped recovery taking place here, right? A very significant swing low taking place here on 7 and 8 of August, right? As global equity markets sold off strongly, they all stabilized on Wednesday and Thursday, 7 and 8 of August, and have staged a pretty strong rebound, right? So not only has it reversed off this swing low level here, US 500 has also broken through a descending trend line. There's a pretty decent descending trend line in place as well, and this descending trend line was taken out on 14th of August. So we saw a bullish breakout take place on 14th of August, and we saw this instrument continue to rise even higher. Right. So the all-time high for US 500 was formed on Tuesday, 16th of July. Right. The all-time high is around was formed at exactly on 5,673.33. This is the intraday all-time high for US 500, and it is a level where it is currently rising towards as well. So we can see this is a swing high resistance that occurred on 16th of July, which also has a Fibonacci confluence. We have two Fibonacci levels close to this zone here. We have a 78.6% projection and a 127.2% extension. So this projection level was found by starting from here, 0.1, 19th of August, going up to 0.2, which is the all-time high, and ending at 0.3, which is the low on 5th of August. We can see the 78.6% projection level aligning quite close to the all-time high, and we see the 100% projection here at around 5,834. At the same time, we've also run a Fibonacci retracement starting from this high on the 1st of August and ending with the low here on the 5th of August. Right, and we can see this retracement here gives us the extension levels at 127% and 161%. So we have two Fibonacci confluence zones that highlight a potential resistance area. Right, so that means if we do after making a pullback here on Thursday, 22nd of August, we saw US 500 bounce strongly on Friday, right? Especially with Jay Powell's speech at the Jackson Hole Symposium, where he explicitly highlighted the Fed's pivot, right, dovish pivot, and this has created a strong tailwind for equity markets, which is what we saw last Friday as well. And this bullish momentum looks to be continuing today as well. And however, we do see a strong resistance level here close to the all-time high. So perhaps this is a pretty decent area to book some profits as well if you've been going long on US 500, especially if you capitalize on the bounce last Friday, right? this region here that's being identified by the Fibonacci projection at 78.6% and the Fibonacci extension at 127% could be a potential area that you can identify as your first take profit zone for any long US 500 positions that you may have, right? There's a strong resistance barrier here, so perhaps you can book some profits within this strong resistance zone. And of course, should we see equity markets continue to push even higher, right, then of course we can target the next potential resistance zone, which is going to be identified by this confluence, which is the 100% projection and the 161% extension level here. Right, okay, so these are the key levels for US 500. Let's look at it on the 4-hour time frame. Let's see if, right, I don't think there's a need to fine tune the levels. I think they're all pretty much pretty relevant as we speak, as we see. And at the same time, we can see a strong bullish Ichimoku cloud here as well, because the Ichimoku cloud can function as a strong support zone as well. And I think maybe we can run right, I think we can run a pretty decent ascending trend line as well. Right, we have a pretty decent ascending trend line on the 4-hour time frame as well, right? Yeah, pretty decent. Okay, not the best, of course. It's definitely not the best. Let me see if I can try and, let's see, starting from here. Okay, maybe just a couple of touches here, including this low here, right? Okay, maybe it's a pretty decent ascending trend line that we can use to highlight a strong support zone, right? So we have this ascending trend line, this overlap support at 5,564, and of course the bullish Ichimoku cloud itself. We have three factors contributing to the identification of a strong support zone here. But however, we can see, of course, the US 500 is actually making a run towards the pivot, making a run towards its all-time high that was formed on 16th of July here. Right, so definitely the bullish, the up bias for this instrument is to the upside, of course, with US 500 running towards its all-time high. All right, Ajay, yes, we're happy to do dollar CAD as well, right? You mean USD CAD, right? Dollar CAD. Yep. Okay, let's cover dollar CAD as well. Right, let's start on the daily time frame, because we can see, right, when we look at it for all the currency pairs and the commodities and even the indices, we are seeing a lot of overextended moves, right? So if you look at it on the lower time frames, it's pretty hard to identify any significant support or resistance levels. But however, when you look at it on the daily time frame, it's much more easier to identify such levels. Right, okay, so we've seen dollar CAD sell off sharply right after hitting a high of 1.3946 on 5th of August. We saw this currency pair reverse very sharply, breaking under 1.3550, and it and especially last Friday as well, a very big down day last Friday. However, this currency pair looks to have stabilized today, right? Looks to have stabilized at around 1.3500 for now. However, I think this currency pair could still continue to drift lower, and where it could find support is at this pivot level, which is at 1.3451. This is a pullback support level that's been in place since 9th of February, and this is an area where we could potentially see dollar CAD stabilize as well. So if you've been shorting the dollar CAD since last Friday, of course, take note, we can identify a potential take profit zone from about 1.3485 down to the pivot here, right? There's a pretty decent support zone here, right? And I can believe you can start targeting 1.3480 and below as a potential take profit zone for any short dollar CAD positions that you may have. Right, and below the pivot, right below the pivot, there's another pullback support level that took place in early February. This is at 1.3386. This is a pullback support level that also has the presence of a Fibonacci extension at 161%. So this extension level was found by running a retracement from here on 11th of July, going up to the high here on the 5th of August. This is where we see the 161% extension come in. Right, in terms of resistance, I think it's pretty clear. There's a nice pullback level resistance that took place on 22nd of August and 23rd. That is where the first major resistance sits at 1.3616. If I were to highlight an intermediate resistance level, I would probably use this level here at 1.3515. Right, we can see previously on 1st of April, in early April, dollar CAD found support around this level here at 1.3515. So what was previously a pullback support level could now potentially function as resistance as well. Right. Okay. So these are the key levels for the dollar CAD on the daily time frame. Let's look at it on the 4-hour time frame here. Right, on the 4-hour time frame, right, with price sort of stabilizing, perhaps we can draw a retracement from this high on 5th of August going down to the low here on early this morning. Let's pull up all the fibs. Right, we can see the 23.6% retracement aligned pretty well with the first resistance. So let's just keep that on. And of course, we see the bearish Ichimoku cloud as well, highlighting the strong bearish momentum. And we can probably draw a pretty decent descending trend line as well over here. Right, so take note, we currently see dollar CAD trading underneath the bearish Ichimoku cloud, trading underneath the descending trend line, right? And it also remains underneath this intermediate resistance level, right? This is an intermediate resistance level at 1.3515 here. Right, so for now the bias for dollar CAD is to the downside, right? Is to the downside, so we can expect this currency pair to drift even lower, and especially if crude prices can remain elevated. Usually, right, typically uh, the Canadian dollar and crude prices share positive correlation. So that means when crude prices are rising, there's strong demand for the Canadian dollar. So if there's strong demand for the Canadian dollar, that of course means dollar CAD is going to be pulling back. So take note, stronger crude prices can act as further overhead pressures for dollar CAD as well. So remember, stronger or higher crude prices are a potential tailwind for the Canadian dollar, which in turn would cause dollar CAD to drift even lower or to fall even lower. All right, okay, before we move on, I'm going to launch a poll as well. Truly appreciate it if you guys can give your feedback with regards to today's webinar, and then we'll continue with another one or two more analysis. All right, so I've just launched a poll. Truly appreciate it if you guys can give your feedback with regards to today's webinar, and we'll move on with the DEX. Right, let's look at the DEX. The instrument that tracks the DEX futures is DE40 here. So let's take a look at this on the daily time frame, and we can see that the DEX is actually pulling back, right, compared to US 500, which is actually pushing higher. What about US 30? US 30 tracks the Dow Jones futures. This is also pushing higher. So we can see US equity markets or futures markets are in the green, whereas DEX is in the red for today. Right, so seeing a bit of this divergence, I guess, between European and US equity markets for now. All right, so um, the pivot level for the DAX has been identified at this pullback resistance at 18,700, right? With US equity markets rising, I was also expecting the DAX to climb higher along with it. However, it looks to be pulling back, right? It looks to be weaker as compared to its US counterparts, right? But okay, regardless, there's a strong resistance level at the pivot here at 18,710. We've identified a nice pullback support level here at 18,244. This was a pullback level that took place on the 20th of August, and we saw 21st August the DAX bounce strongly off this level. Now with price with this instrument currently pulling back, we can also run a Fibonacci retracement from this low on 5th of August to the high of last Friday. We can see there's a 23.6% retracement level that aligns pretty well with the first support. And I also see a 38.2% that aligns pretty well with another pullback support level here. There's another pullback support level here that occurred on Friday, 14th of June and 17th of June at around 17,992. We can identify this level as the next support area for the DEX. So let's keep 23 and 38. and also we can also spot a nice ascending trend line as well, right? With a nice ascending trend line that's currently in play as well. All right, great. Thanks so much for the feedback, everyone. Right, truly appreciate it. Right, okay, so let's continue. So you can see a nice ascending trend line. We have identified the various support levels for the DAX as well. And of course, the all-time high, which occurred on 16th of May, right? On 16th of May, the DAX made its intraday all-time high at around 18,940. And this is where the first major resistance has been identified. Right, let's look at it on the 4-hour time frame, right? We can appreciate this ascending trend line even more, right? So we have a combination of the ascending trend line, the bullish Ichimoku cloud, the first pullback support level at 18,344, and the 23.6% Fibonacci retracement, as all identifying to a strong support zone. Actually, when we fine tune the analysis on the 4-hour time frame, I'm going to move the first support down to this pullback level here, right? This is a much cleaner pullback support level that has taken place, right? So we see a nice pullback level here at 18,272. It also has the presence of a 23.6% Fibonacci retracement, and we see an ascending trend line and the bullish Ichimoku cloud, right? 4 factors contributing to the identification of a pretty strong support zone here. So we do see the DAX, at least if it pulls back even further, but it stays above 18,272, it's quite likely we may see this uptrend resume once more. However, if we do see a clean break below 18,270, right, that's going to probably highlight a potential shift in momentum, and we can potentially expect further downside or deep further pullback or deeper pullback for this instrument here. All right, okay, so these are the key levels for the DAX, right? It seems to be consolidating and pulling back today, but if it can stay above, right, this support zone here, we can expect this instrument to climb higher as well. All right, okay, or rather we can expect this instrument to resume the uptrend. All right, okay, so that's all I've got for today, right? Thanks everyone for tuning in to today's session, brought to you by IC Markets, right? Today's live analysis session. Do look out for all upcoming webinars brought to you by IC Markets for the rest of this week, right? We got a combination of educational topics on Tuesday and Wednesday as well. All right, stay tuned, and I wish you all the best in your trading journey. All right, thanks everyone. Take care and have a great trading week.